Good morning, my name is Przemysław Kwiecień. I'm Chief Economist of the XTB, and it's my pleasure to host you on our weekly trading webinar. So today we are going to discuss about emerging market currencies. This is maybe a little bit exotic to you, but this is interesting segment of the forex market encompassing currencies like Brazilian real, Mexican peso, South African rand, Polish zloty, currencies where you have trends that somehow are very often stronger than on the majors. So I think this is an interesting story to watch today, given that on many other markets we have subdued volatility. So we're going to discuss these currencies a little bit, but of course obviously we are also going to focus on other stuff, and traditionally let's start with the items that are important for investors on Monday morning. So having a look at what happened last week, we had all these inflation prints that were higher than expected. So I think this is pretty important to bear in mind, especially if you look at these inflation expectations on the right. They are rising quickly. So the Fed, they had a view where they were saying that the inflation was transitory and it will return to 2% quickly, whereas as you can see here, these inflation expectations are on the rise, and this is a problem for them. Markets were upbeat for most of the week. Powell, FOMC chairman, clearly tried to maintain this positive momentum during his speeches in Congress. However, there was some deterioration Friday, exactly after these inflation expectations were revealed. Then we had the decision from the OPEC on Sunday to eventually increase oil output by 400k barrels per day. We'll return to this when we discuss charts. And this week we are going to have few important things to watch, especially in the second part of the week. We have the ECB meeting, flash PMIs. I will discuss these things towards the end of our webinar, and we have quarterly reports. It's not yet the biggest week, but we have some important releases like IBM, Netflix, Twitter, and few others. So let's start with major markets before we move to these emerging market currencies. And yeah, basically we had this, the most important print was on Tuesday, where we had this consumer inflation accelerating to 5.4% in the US. So that's already pretty high, 5.4%. This is not an unusual thing. And as you can see here, obviously there are some temporary factors that helped push this inflation higher, especially inflation of used vehicles, and this is the pink bar, and it's rising, and fuel costs, as you can see here, this, I don't know, violet or whatever it is. So obviously these two combined, they represent perhaps even slightly more than half of this total bar. So you might say, all right, this indeed is temporary, but as you may also see, other bars are increasing as well. So let's take a look at apparel that used to subtract from inflation, not only during the pandemic, but even before, whereas now it's adding. Or you have things like public transport, housing costs, and a few others that are clearly on the rise. So yes, obviously this inflation will decline from present levels. Most likely this decline will start next month. However, the question is, where are we going to land? Is it going to be a decline to 2%, or is it going to be a decline to a higher level? So this is still an open question. And if you look at things like this chart, which represents container shipping rates, as you can see, these rates absolutely skyrocketed. So you might worry that on one hand you might get deterioration in trade, in industry, because obviously this doesn't help. and then again you might have this inflation pressure building up. So this is continuing, and at least for now the view of the Fed doesn't seem to be supported by the data, and I think that's the key reason why this is still unresolved despite all the narrative from the central bank. Obviously, what maintains markets close to the record highs is inflow of money, which is the main thing that the Fed does. And as you can see here, you had record ETF inflows in the first half of 2021. It's actually not even close to anything we had before. The previous record was second half of last year. So obviously it's all, greatly supported by central bank policy. Obviously, this means that at some point, if there is some major factor that scares investors, there will be a record amount of money sitting in risk. So you may imagine what's going to happen. But for now, obviously, it helps markets higher. And final piece of data from last week is retail sales that we had on Friday. And this report was pretty strong. And I think that the most important thing is that US retail sales is way above the trend, pre-pandemic trend. So, and it's actually much higher than if the pandemic never occurred. So I think this is really important, and it means that there is a potential for this inflationary pressure to be there, because if consumers have a lot of money and they spend it, they obviously may adapt to this inflationary pressure, especially with all these issues on the supply side. So I think with these inflation expectations on the rise, there was a bit of jitter on the markets last week on Friday, but it's too early to say, I would say. Especially when you look at S&P 500, what we see here is only a minor pullback from another record level, and it doesn't mean anything right now. What I'll be looking for is this level, 42.68, which is pre-FOMC high, and obviously it now acts as a support level. So let's see if it stops this decline, or maybe even this decline stops earlier. The other thing that I'll be looking at is today's opening on Wall Street, because on many occasions we saw where Monday started on the soar, and then the US opened and pulled all these things higher instantly. So we might not even test it. So it's first thing to see is today opening on Wall Street. If they open with strong buy the dip momentum, then probably it's irrelevant. If not, then watch this support, and only if it's broken it may turn into something bigger. Looking at the DAX, looks a bit more serious, because it's already breaking through the lower limit of a very, very mature upward channel. So the DAX definitely looks weaker. As you can see here, there's also a potential for double top here, because here's the first top and then another top where investors were unable to push through last week. So now we have this attempt to break lower. Obviously there is some tangible support here around 15k 300. However, with this nearly flat period of time after a long rally, no correction since October last year, and a break lower through this limit, then yeah, definitely a risk of a bigger correction is there. And like I said, oil market, I think commodities are worth watching, because I was saying few weeks ago that this reflation trade was, the commodities were a big part of this reflation trade, and if commodities see a bigger correction, that might be also a warning sign for other markets. So far, with this decision from OPEC to increase output, we only see a major reaction today, and it's a part of a bigger ABC correction, which is a part of a trend. So far I would say not like massive reason to worry. Also, if you look at copper prices, they maintain above this long-term trend line. However, if it's broken, and you can see this opening today, it's it's around this trend line. If it's broken lower, then obviously it's another factor. So there are many markets right now sitting very high, and there is no reason to be sure that it's going to happen this time if it didn't happen so many times before. But these are the places that are worth watching for sure. Okay, let's move on to the story of the week, and that's emerging market currencies, which are strong, which are weak. So looking at the markets for the past few months, you obviously notice that US dollar does relatively well, whereas European currencies struggle, and that's the main narrative. However, against this backdrop, you can also see that there is a lot of differentiation between emerging market currencies. You have very weak currencies like Turkish lira, which has a set of very serious problems, but even among the more, I would say, stable currencies, you have those that are struggling a little bit, like Chilean peso, Romanian RON, Polish zloty, and those that are doing much better, like Brazilian real or South African rand. So why is there a difference, and what we can expect going forward? So first of all, let's take a quick look at fundamentals. And obviously, I can understand that this map might be a bit puzzling to you, but what it means is that you like currency if there is more green than red, basically. So as you can see here, there is not that much differentiation in these currencies. You can see that probably Mexican peso has the best fundamentals, and it's followed by South African rand and Polish zloty, I guess, with Romanian RON having by far the weakest fundamentals. However, what is really striking here, and I think what is really important today, given all the central bank policies, is that real rates, which is interest rates set by central banks minus inflation, are very negative, right? So, in the past, these emerging market currencies used to offer extra yield to investors, and that therefore attracted capital, and that's no longer the case. These negative rates, these real rates, are negative as much as, or sometimes even more than, on developed markets. So basically, there is no reason why global capital will go there. However, you might see that there are big differences between what these central banks do right now. There are situations, like especially with Brazil, where you already had 75 basis point increase in interest rates in June, and you had another increases in Mexico, Hungary, Chile, and Czech Republic, whereas in South Africa, Romania, and Poland, you have no increases. So there is different response, and in a world where central bankers are so reluctant to withdraw this monetary support, every situation where you have interest rates going up or monetary tightening actually happening is rewarded by global capital. Capital is expecting these central banks to maintain more prudent policy, and therefore it goes there. So for me, this is really very strong message right now. Looking at the long-term valuations, you can also see that some of the currencies, like European emerging market currencies, are fairly stable, and there's not so much happening there, whereas these Latin currencies, especially Brazilian real, they are relatively cheap, right? I mean, the real rate, which is nominal rate against inflation changes, it's not much more than half of what it was 10 years ago. Also, Mexican peso, South African rand, these currencies are also much cheaper than the European ones, although these two, they gained quite a lot throughout the last couple of months, so they could be prone to a correction because there is quite strong correlation with Wall Street. So Brazilian real is looks to be the most undervalued from a long-term perspective, and as you can see here, it's confirmed here, it's confirmed on the chart, right? It's no longer at the highs, but yeah, looking at the past levels, it's still pretty high. So it looks like, you know, if the monetary tightening is continued, it could actually at some point attack this zone, support zone around 5, and then perhaps there is a potential to make these declines bigger. Also worth watching, Mexican peso. Like I said, these emerging market currencies, they regained a lot of this weakening from the crisis, and right now it's on the support, like South African rand, but South African rand is weaker fundamentally, so I'll be more looking at the peso. If there is a correction on Wall Street, then probably we could be looking at a move somewhere here, or at least there, and then maybe appreciation of the peso is continued in the below of a longer term. Okay, let's move on to what we are going to see this week. And like I said, two major events: ECB meeting and flash PMIs. ECB meeting is on Thursday, whereas flash PMIs are on Friday. So let's start with the ECB. The meeting, it didn't attract a lot of attention last month, but this time it could be different because the ECB increased inflation target from 1.8 to 2%. Maybe this change doesn't look like a big one. However, it could mean that ECB will prepare some more money printing, even though they're already doing a lot. Markets might be interested if increase in price target, if it means more imminent policy expansion. As you can see from the Bank of Japan, increase in inflation target doesn't really do a lot unless there are some other factors helping to push inflation higher. So this move, from the common sense perspective, doesn't make sense. But the ECB used to be doing a lot of strange things before. So I'm not really that surprised. And like I said, on Thursday, markets will be mostly interested in any further action following this price target increase. So this will be important for the euro because already euro dollar is under pressure, and there could be a risk, longer term risk, of breaking lower below this 116, 117 supports. Right now you have you can still imagine that this is like, a big ABC correction with support zone over here. However, as well, you can look at this and as a big head and shoulders formation, and a break here already could trigger some bigger downward move. So technical analysis, it still provides some support for the euro right now. However, if the ECB is very dovish on Thursday, euro could be in trouble. Another important day is Friday, when we have flash PMI releases for July, and what I would be looking at is industry and any further problems that they signal, because obviously these PMI indices are high. However, also they have a lot of issues with prices, with supplies, with employees, with being unable to fill orders. So let's see if that continues or it's weaker or stronger, because if it continues, we may have a situation where we already had a peak in activity in these industrial powerhouses in April, and deterioration from there. This is something that I think markets are not looking seriously into right now, so definitely releases to watch this week. Okay, so ladies and gentlemen, thank you for today. Be sure to stick with our news section in Xstation Mobile, where we will report all these events and more for you during the week. and we see each other next Monday at 7:30. Have a great week.